Ladies and gentlemen, archivist here. If you want to understand why your heating bill is about to become a mortgage payment, you must stop looking at the Federal Reserve dot plot. Stop looking at the Consumer Price Index prints from Washington. That is the theater. That is the puppet show designed to keep you calm while they burn the furniture to keep the house warm. If you want the truth, you must look at the satellite thermal imaging over Ryazan, Russia, from 14 hours ago. While you were arguing about interest rate cuts on Twitter, a swarm of kinetic drones just deleted 3 primary distillation columns at the Ryazan and Ilsky refineries. The smoke you see rising over the Urals is not just burning oil. It is the cremation of the global energy equilibrium. The analysts on CNBC will tell you this is priced in. They will tell you that markets are efficient. They are wrong. The market is not efficient. The market is blind. And what I am about to read to you from the Omega file is the autopsy report of the old world order, the forensic data. Let us look at the numbers that the television anchors are too afraid to read out loud. They will tell you that oil is up 2%. That is a distraction. Here is the kill shot number that defines your future. $2.5 million. That is not a random figure. That is the current Class 2 war risk insurance premium for a single Aframax tanker attempting to load diesel at the port of Novorossiysk as of this morning. $2.5 million per voyage, just for the paper coverage to leave the dock. This is not inflation. This is a blockade by actuary before this morning. That number was $150,000. It has increased by 1,600% in 12 hours. Do the math. This adds approximately $4 per barrel to the break-even cost of Russian crude before it even hits the water. But here is the darker reality. The reinsurance giants Lloyd's of London, Munich Re, Swiss Re have quietly issued a burn notice to their brokers. They are pulling coverage entirely. This creates a $400 billion liquidity hole in the global energy trade without insurance. The ships do not move. If the ships do not move, the physical molecules of diesel do not arrive in Rotterdam. And if the diesel does not arrive in Rotterdam, the German industrial engine does not just stall, it seizes. The haunting part is not the price, it is the silence. The media is ignoring this $2.5 million tax because they do not understand it. But the bond market does. The credit default swaps on European chemical giants are blowing out right now. This is the sound of the financial levees breaking. The war thesis clearing the decks. Why is this happening now? This is not an accident. This is not a random escalation. This is a coordinated structural demolition. We are witnessing the clearing of the decks. The Western Alliance has realized that sanctions failed, the price cap failed, the diplomatic scolding failed. So they have moved to the kinetic phase. They are targeting the physical infrastructure of energy refinement. Here is the forensic proof, laid out in 3 cold, hard facts. 1. The distillation bottleneck. You cannot just fix a refinery. The distillation columns that were destroyed at Ryazan are massive, complex feats of metallurgical engineering. They require specific alloys and proprietary technology to replace. Here is the catch. The companies that make these columns, companies like Schlumberger or Halliburton, have left Russia. Russia does not have the domestic capacity to cast these towers at speed. They are now dependent on Chinese reverse engineering, which takes months, if not years. This means those millions of barrels of refining capacity are not offline for a week. They are offline for the duration of the war. This is permanent demand destruction for the Russian revenue stream. But it is also permanent supply destruction for the global market to the diesel famine. The world runs on diesel. Your Amazon package is delivered by diesel. your food is harvested by diesel. The mining trucks extracting copper in Peru run on diesel. Russia was the primary gas station for Europe's diesel. Even after the sanctions, the shadow fleet was laundering this fuel through India and Turkey back into Europe. But you cannot launder what does not exist. If the refineries are burning, there is no product to load onto the shadow tankers. The grey market loophole has just been closed by high explosives. Europe is sitting on less than 40 days of strategic diesel reserves. When those run out, we are not talking about high prices. We are talking about rationing. We are talking about the trucking unions in France and Italy paralyzing the continent. 3, the insurance weaponization. I mentioned the $2.5 million premium, but it goes deeper. The Western financial authorities are using this chaos to weaponize the clearinghouses. Euroclear in Belgium is now signaling that any transaction involving a vessel that has touched a sanctioned port will be frozen indefinitely. This is not a freeze of assets. This is a seizure of working capital. They are forcing the energy traders to choose. Do you want to trade Russian oil and lose access to the dollar system? Or do you want to starve? Most traders are choosing to starve. The liquidity is evaporating from the energy sector faster than water in the desert. The bag holder, the alliance of victims. So, who pays for this? It is not Vladimir Putin. He sells his crude to China. It is not the American consumer. The United States is energy independent. The bag holder is the European Union. Specifically, the zombie industrial complex of Germany. Let us name the names. Let us look at the victims who are about to be sacrificed on the altar of this energy war. Look at BASF, the largest chemical producer in the world. Their entire business model was built on cheap Russian gas and affordable feedstock. That model is dead. Without affordable diesel and naphtha, their plants in Ludwigshafen are nothing but rusting cathedrals of a bygone era. They are burning cash just to keep the lights on. Look at Volkswagen. They operate on razor-thin margins. A 20% spike in energy costs wipes out their entire annual profit guidance. They are not just facing competition from Chinese EVs, they are facing a physical inability to manufacture cars at a profit. Look at the European Central Bank. Christine Lagarde is trapped. She cannot print oil. She cannot print diesel. If she raises rates to fight the inflation caused by this energy shock, she bankrupts the Italian government. If she lowers rates to save the economy, the euro collapses against the dollar, making energy imports even more expensive. She is checkmated. The European pension funds holding German industrial bonds are the ultimate bag holders. They are holding paper claims on factories that can no longer function. This is financial conscription. The citizens of Europe are being drafted to pay for this war, not with taxes, but with their standard of living. And do not think you are safe just because you live in the suburbs of Chicago or Toronto. The global energy market is a connected vessel. When Europe panics, they will bid up the price of diesel everywhere. They will come for the American exports. They will come for the Canadian supply. The price at your pump is about to be set by a desperate bureaucrat in Brussels. The protocol resource denial. The phase shift is accelerating. The polite society of global trade is over. We are entering the era of resource denial. You cannot navigate this with a 60/40 portfolio. You cannot survive this with an index fund. Here is the resource denial protocol. Rule 1. Short the zombies. You must ruthlessly cut exposure to energy-dependent industries in import-heavy nations. Do not own BASF. Do not own BMW. Do not own the European heavy industrials. They are dead money. They are walking ghosts. Do not own the banks that lend to them. Deutsche Bank, Commerzbank. These institutions are sitting on loan books backed by assets that are rapidly becoming liabilities. Rule 2. Along the North American fortress, capital is fleeing Europe. It is fleeing the war zones. It is looking for safety. Safety is not just a government bond. Safety is energy security. You need to own the companies that control the molecules in the safe jurisdictions. Look at Canadian Natural Resources CNQ. They sit on a mountain of heavy crude in a politically stable fortress. They have a break-even price that allows them to print money while the rest of the world burns. Look at Cheniere Energy LNG. As Europe starves for gas, they will be forced to buy every cubic foot of liquefied natural gas that America can export. Cheniere owns the infrastructure. They own the toll road. Look at the pipelines. Enterprise Products Partners EPD, or Energy Transfer ET. Inflation makes the steel in the ground more valuable. They move the blood of the economy. They get paid regardless of the price. Rule 3. The inflation hedge is physical. The central banks will try to paper over this disaster. They will print trillions to bail out the energy importers. This means the currency will debase. You must own the anti-dollar. Gold, not the ETF. Not the paper promise. Physical gold. Silver, the industrial metal that is already in shortage. And most importantly, energy. If you can. You buy the physical commodity. If you cannot, you buy the producers who have zero debt and long reserves. Diamondback Energy Fang, EOG Resources. These are the new banks. Their reserves in the ground are the only solvent currency left. Rule 4. The personal stockpile. This is the uncomfortable part. The part you do not want to hear. The supply chain for food is essentially a derivative of the diesel price. If diesel hits $6, $8, $10 a gallon, the trucks stop. The just-in-time delivery system breaks. You are 3 days away from an empty supermarket shelf at any given moment. Do not assume the system will hold. Assume zero delivery. Outro. The smoke over Ryazan is a signal. It is the signal that the kinetic war has merged with the economic war. The insurance adjusters have already left the building. The smart money has already rotated into hard assets. The politicians are writing speeches to blame speculators for what is coming. You have a brief window of time before the shockwave hits the retail price level. Use it. Go to your pantry right now. Look at the shelves. Count your calories. Tell me in the comments, what is the one item you cannot survive without if the ships stop tomorrow? Is it coffee? Is it antibiotics? Is it baby formula? If you do not have an answer, you are already a casualty. You are just waiting for the official notification. This is Archivist. The protocol is active.